Asian shares mixed after Dow drops more than 1,000 points. Shares were mixed in Asia on Tuesday after Wall Street suffered its worst session in 2 years, with the Dow Jones Industrial Average slumping more than 1,000 points on fears that a viral outbreak that began in China will weaken the world economy. Japan's Nikkei 225 index lost 3.3% to 22,605.41 after it reopened from a holiday on Monday, and Prime Minister Shinzo Abe called for a nationwide effort in containing an escalation in the spread of the coronavirus. Measures taken in coming weeks would determine if Japan can keep the virus under control, Abe said. Hong Kong's Hang Seng edged 0.2% higher, to 26,856.68, and the Shanghai Composite Index shed 0.7% to 3,009.51. In Australia, the S&P ASX 200 shed 1.6% to 6,866.60. South Korea's Kospi rebounded from a steep loss on Monday, adding 1.2% to 2,103.61. Shares also rose in Singapore but fell elsewhere in the region. In Kuala Lumpur, Malaysia's main benchmark dropped 2.7% amid a political upheaval after Prime Minister Mahathir Mohamad offered his resignation to Malaysia's king while his political party quit the ruling alliance. Overnight on Wall Street, traders sought safety in U.S. government bonds, gold and high-dividend stocks like utilities and real estate. The yield on the 10-year Treasury fell to the lowest level in more than 3 years. Technology companies, whose supply chains have been disrupted, accounted for much of the broad market slide, which wiped out all of the Dow's and S&P 500's gains for the year. More than 79,000 people worldwide have been infected by the new coronavirus. China, where the virus originated, still has the majority of cases and deaths. The country's economy has been hardest hit as businesses and factories sit idle and people remain homebound because the government has severely restricted travel and imposed strict quarantine measures to stop the virus from spreading. Economists have cut growth estimates for the Chinese economy. The ripple effects of the outbreak are being felt all around the world, as China is both a major importer of goods and a source of parts for intricate supply chains. China's government promised tax cuts and other aid Monday to help companies recover despite anti-disease controls that shut down much of the world's second-largest economy last month. Economists say it is likely to be at least mid-March before automakers and other companies return to full production. Still, while concern about the virus has prompted some sporadic selling in the past few weeks, for the most part global markets have traded as if the virus impact would be limited. Until Monday, the major U.S. stock indexes had all been in the green. Benchmark U.S. crude oil was stable, gaining 26 cents to $51.69 per barrel in electronic trading on the New York Mercantile Exchange. It fell $1.95 to say. For more on this story, visit the news article link.